next topic is consolidated financial statements. Have you done this topic before? Done? Or first time? Done, huh? Anybody who's done can tell me how does this work? What is consolidation? By the way, this topic is there in your IPCC also, and one of the most important topics in your CFI accounts paper, and most lengthiest also. There. The questions, in fact, you see here right now, same question you will find it in your CA final book also. The reason is there you have consolidation you'll have to do as per accounting standard as well, and you have to do it as per Ind AS also, IFRS also. Hence all questions you see here will be repeated in CA final study material also. Same, institute has gone like they've just copy pasted at both places. Fine. Okay, with that in mind, consolidated financial statements. Even if you don't know, can you just, looking at the name, can you say some words about it? What is consolidated financial statements? To consolidate means what? Pull up, to add up. Correct, in simple terms? Adding up. What are we adding? Financial statements. What are the components of financial statements? Balance sheet, P&L, cash flow statement, notes to accounts. Basically all this we are pooling or we are collating. What is so difficult in that? A KG kid can do it, no? Totaling work. A good calculator, or at least even a decent calculator would work. Yes or no? Just totaling, no? Correct, no guys? There are two balance sheets. You have to supposed to consolidate. Or two P&L you have to add up. What could be so problem in that? With that? Think what could be in that so much of a problem that it runs into somewhere around 300 pages this chapter in CA final only. Not kidding. Why? Just addition, huh? Addition for 300. Why? Huh?
Different companies follow different policies.
He's saying, sir, one is following FIFO method for inventory valuation, another one is following weighted average. So thereby you can't do straight by addition. That is high funda level adjustment. We will not see in IPCC. Good. Possible. Accounting policies are different. Hence straight away you can't add up. Fair enough. That's one. Anything else? Simpler terms you tell me. You don't have to go in nitty-gritties of too many components. At the basic level, what could be the problem that could arise at the time of adding? Let's concentrate on balance sheet. Any two random company ka balance sheet can you add? My company, and I will add it with let's say Tata Limited. ArivuPro ka balance sheet, I will add it with Tata and call it as consolidated financial statement. Is it okay? I mean, any two random companies can you consolidate, or there should be a nexus or connection? What is that connection? Shareholding percentage. So if you have to consolidate a financial statement, one company should have at least 51% or more shares in the voting power in the other company. If X Limited, or I'll give you an example, then you tell me. X Limited, and there is another company, Y Limited. X Limited owns 75% of equity shares of Y Limited. X Limited owns 75% equity shares in Y Limited. Can X and Y consolidate now? So if you want to consolidate, the first criteria is one company should have 51% or more shares in the other company. There is also consolidation at another level, joint venture level and all, which will not consolidate for the time being. We will only take up now scenarios where it is 51% or more. You have to do it for other ways also, which we'll learn it in CA final. Let's not go there for the time being. Fair enough? So here we'll keep the criteria as 51% or more. First step. Then only there arises a need to consolidate. First step is okay? Yes sir? Then only you will add two balance sheets. First of all, why should I add? You got the criteria to add 51% or more. Why should I add? Anyway, X is doing their own balance sheet. Why is doing their balance sheet? Because both are different companies. They have to prepare their financial statements, get it audited, file it with the authorities, ROC, income tax authorities, etc. etc. Anyway, you have two company ka balance sheet. Why should we add it and call it as consolidated financial statement? What is the necessity of that? Why should they consolidate first of all? Any idea? Look at that shareholding percentage and tell me. They own the company. X. Any other answers? Hitesh? That's it. Okay. X Limited owns 75% shares in Y. Correct or no? I mean, can I say, what do you own in a company? Can you own share capital? When they say X owns 75%, X is a shareholder. I told equity means what? I told you the definition of equity shares. What is that? It's an instrument that ensures residual interest in the company. Meaning after you pay off all the liability, still asset remains means what? Equity shareholders get that. Yes or no? Or maybe let's simplify it a little bit even more. X owns 75% of Y. Correct? That means X can easily control Y. All their policies, what price to buy, what price to sell, whom to appoint as auditors, directors. Yes, all these financial policies and non-financial policies, operating policies, etc. of Y Limited can be controlled by X Limited. One, yes or no? Fair enough? That means X Limited is not one company. Though legally they are one company, in a way they are now two companies, because X company owns not only their own assets, but they can also have a control over Y Limited. That's one reason to consolidate. Is this okay? Because they control Y Limited. Another reason is, if let's say Y makes a profit of 1 crore, Y Limited makes a profit of 1 crore rupees, assumption, correct? And Y wants to give the dividend, assumption, 100% they want to give dividend, assumption, simply. Fair enough? How much profit they made? 1 crore. They want to pay what? Dividend of 1 crore. Whom will that dividend be paid to? Whom will you pay the dividend? To the shareholders. Who are the shareholders of Y Limited? X and others. Yes or no? That means Y ka result is indirectly influencing X. Yes or no? That is another reason to consolidate. So if you are a shareholder, suppose you have bought some shares in X. You have purchased some equity shares of X. You not only want to know X ka performance, you also want to know Y ka performance, because Y ka performance affects X and X ka performance affects you. So that is the reason they said, now don't prepare X ka statement and all. X ka statement you prepare separately. Standalone financial anyway you have to do. But along with that, we also want you to prepare something known as consolidated financial statements. Consolidated financial statement is not a substitute. You have to prepare standalone also and consolidated also. In India, they say only consolidated is mandatory, standalone is optional. But in India, we do standalone as well as consolidated. Standalone means what? X ka financial statement alone. That is also mandate, and X also has to prepare what? X plus Y ka CFS. CFS meaning consolidated financial statements. You got the need to consolidate because one, you control, X controls Y, and two, Y ka performance directly affects or indirectly affects X also. That is a need to consolidate. You got the need guys? Need to consolidate. What is the need to consolidate? If you have to express in points, what can you write? What are the points? X owns Y Limited, correct? And then X controls policies of Y. Easily they can influence policy of Y. Yes or no? And then Y's result affects X also. Hence, because of these are some of the reasons why we consolidate. Those are not the only one. There could be many. We're just listing out, just to understand. If somebody asks us why, at least 3 points we'll know. No? So we just jotted down a few. Fair enough. Okay, next. Same example. X Limited owns 75% in Y Limited. Will we consolidate? Yes, because we have got a control. If there is a control, then you have to consolidate. Control is equal to consolidation. Control you will get when you have 51% or more. Do you have 51% or more here? So will you consolidate? Yes. Now think from the balance sheet perspective. What could be the problems that could arise on consolidation? X has some balance sheet, Y has some balance sheet. Consolidation means just pulling up, just adding up. What could be so much of a problem there in adding up? Think from this only. What I put arrow mark only. That only is your answer. What about percentage? What presentations? Adding up. One moment.
You have to separate like X assets and Y assets, or else the stakeholders won't understand which exactly belongs.
No. That anyway you prepare separately, no? We will not separate. Consolidate means pulling up only. There also if you segregate means it will become standalone, no? We are preparing X ka financial statement standalone. Along with that we are giving consolidated. So that they should be able to understand. Yeah, they can study AS21 if they want. All the statements are called out in AS21. They can read probably that and understand. Yeah, what is it?
Share capital of X making 100 crore, share capital of Y making 80 crore.
We'll write it as 110 then. Actually, you started with the right number, just drifted away. That is a clue. Share capital. Concentrate on that and tell me. Assume same. Even if it is different, 2 shares you have to call out. We have done this in previously, right? If preference shares ka 2, if you have means, don't collate, but show it separately. That is also consolidation only.
So X has invested in Y.
So what?
So if we share it cannot show share capital.
Perfect. Here in our example, what did we say? That Dundee, you are able to see? X invested 75% in Y. That means for X, it is an investment. Yes or no? Investment for X. Investment means it's an asset. Assets have what balance? Debit balance. For whom? X Limited. So far good. Where did they invest in? Equity shares of Y. That means, can I say Y has given equity shares to X? If Y has given any equity shares means, what is it for Y? It is share capital or equity share capital? Yes or no, guys? Equity share capital, Y will show on the asset side or liability side? On the liability side, having credit balance. Same component is an asset for one and a liability for another one. When you consolidate, can you consolidate this and show both as an asset and liability? You can't show. That means what you have to do here? You can't show neither of them. Neither investment will come in consolidated balance sheet nor capital of Y Limited will come in consolidated balance sheet because of this problem. Is this okay? They won't net off. They won't net off because investment is shown at what price? Cost price. Whatever you buy, at that price you will show investment, but share capital is always shown at face value. Possible that face value could be 10 and the cost price at which you could have purchased could be 14. There would be a difference. What to do for that difference is one working note in consolidation. We are only discussing the problematic areas, not the solution. This could be one problematic area. Got it? One, you can't show investment nor can you show share capital of Y because it's an asset for one and a liability for another one. You can't show same component as both. So thereby we can't do that. So we have to cancel it. But since they are shown at different values, if they are equal means no problem. But will it be equal? Face value of Tata ka share is 10 rupees. Will they issue it at 10 now? It might be trading in the market at 1000 rupees. That means they will issue it at what price? 1000. But share capital ka face value is 10, but you bought it at 1000. Are they matching out? They are not matching out. So what should we do for that difference ka? One working note we have to present. That we will do. Are we okay? You got one issue there? Anything else? Mutual owing. Suppose X sold goods to Y and didn't receive the money. That means in X ka books what it will be? X sold goods to X Limited sold goods at 1 lakh to Y Limited. That means, and X has not received any money. That means X will show this transaction as what? For X, they have to receive from Y. That means in X books it will be shown as debtor. Worth how much? 1 lakh. Y Limited has to pay. That means they will show it as what? Creditor. For how much value? 1 lakh only. So for one company it's a debtor, for another company it is creditor. By the way, is there two company for consolidated financial statement or consolidation means pulling up? Consolidation means two companies become one. Who will pay the other? Whom? Nobody. So it means what you should do for this mutual debts? All this mutual debt stands. Mutual debt stands cancelled. Same like your amalgamation concept. Fair enough? You remember stock reserve adjustment and all? Stock reserve adjustment and all you remember? All this will again come back here also. Mutual owing, stock reserve adjustment all are same at consolidation level also. Fine. One more problematic one we saw as investment, another one we saw as mutual debts. One more could be what you will show under shareholders funds. You will prepare balance sheet. On the liability side heading you give is shareholders funds. What will you show under shareholders funds? Under shareholders funds you're going to show share capital, and below that what are you going to do? Reserves and surplus. Yes or no? That means, can I say these are the entitlements of shareholders? These two belongs to shareholders, can I say? Am I right in saying though, guys? Yes or no? So that means, let's say Y Limited has a reserves of 10 lakh rupees. Assumption. That means it belongs to the shareholders of Y Limited. Who are the shareholders of Y? X to the extent of 75%, others to the extent of 25%. That means all the reserves of Y Limited or a subsidiary company has to be distributed among the holding company, and this others 25% we call them as minority interest. MI, minority interest. In IFRS we call it as non-controlling interest, NCI. Terminology is different, meaning is the same. Minority interest or non-controlling interest. Let's stick to minority interest for the time being. Fair enough. So this how whatever reserves and surplus of Y is there, we have to distribute among X and others. For this, one working note is necessity. Make sense, guys? Yes or no? These are your major. In fact, like this reserves and surplus ka adjustment is your major working note. If you can get that right, I would say like at this level, almost 70% of the problem is done for. Rest other thing. Consolidation, in fact, is the easiest. Consolidated balance sheet means just to add up, line by line addition. Except if you take care of those working notes. If you get the working notes right, things will be awesome. Otherwise, you'll have to wonder. Fair enough? Okay. First only I'm going to tell you, don't freak out. It's going to be a little lengthy. It'll take some time. And chances of they asking full-fledged questions are pretty rare. Not that it has not come. It has come once already. Generally, I'm going to prepare one. I'm telling you what I'm going to do now. Question will have a lot of working notes. And then consolidated balance sheet will be prepared. That is the easiest one. They asking full-fledged questions is pretty much less. I don't know, now that they've changed the syllabus, we can't say. But normally if you see the most of the questions in study material, it is based on the working notes that we are doing as a full-fledged problem. Whatever working notes we are doing, that they have phrased as a question and given. Hence, 2 full-fledged questions we'll do just to get our understanding right, so that the working notes next problems will be easier. It is going to be a little lengthy. Fair enough, you have to bear with me for full 2 problems. First problem, you may not get it full thing, but by the end of second problem, I'm sure like you would have got most of the concepts. Is it fine? So I need your attention for this. If you understand those 2 problems, tomorrow's session is going to be a cakewalk. Because it's just going to be a replica of this, but in a different format. If you don't get this tomorrow, I might as well bunk. No, I'm just kidding. Please do come. Literally, they shouldn't take it off. Yeah. Yes. So please tell me if you are able to, if you're having any problems. We'll have an open communication there. So can we start the question? It's going to take about 45 minutes. Hope you're okay with that. Then we'll take a break. That's fine. Let's start with first question on consolidation. Let's read it and then we'll figure it out. On 31st March 2014, balance sheet of H Limited and its subsidiary S Limited. Are you able to make out of that term subsidiary? So in my example, what is subsidiary? What is subsidiary? Can you tell me by the way? X owns 75% in Y. That means X is known as what? Holding company. The guy who's holding the share is known as the holding company. Whose shares are being held is known as the subsidiary company. So X is holding and Y company is your subsidiary company. Let's come back to the question. So H Limited is a holding company and S Limited is a subsidiary company. Share capital ka face value is 10 each. Both the company ka share capital they've given 4 lakh and 1 lakh. Then they've given general reserve, P&L, creditors, bills payable, that is okay. On the asset side, come back to this word known as investment. What is that name of the investment? Investment in S Limited. In whose books are you able to see that? H Limited ka column you are able to see. So that means H Limited has purchased shares in Y Limited. How many shares they've purchased? They've given in bracket 7,500 at cost. The total cost they paid for that 7,500 shares is 1,40,000. True so far? Is it okay, guys? Next, preliminary expense, all this is okay. Asset side, everything is fine. Let's get to the adjustment. Draw consolidated balance sheet as on 31st March 2014. Go back, check the heading of that balance sheet. 31st March 2014. When are you preparing consolidated balance sheet? Same day. Obviously, after balance sheet is done, each company has to prepare their financial statements first. Then only you can consolidate them. So date should be same only. Not 1 year gap. You're not doing balance sheet, you're doing consolidated balance sheet. You will start consolidation when? When the total financial statements of individual company are done and ready. Fair enough? So hence both the dates are same there. Yes sir. Okay, draw consolidated balance sheet as on 31st March after considering the following. H Limited acquired the shares on 31st July 2013. Underline that. That is important. In fact, very important. H Limited acquired the shares on 31st July 2014. Just go back. What is the balance sheet date? 31st March 2014. That means year is ending on 31st March 14. Can you tell me what is the current year? It will start from which date? It is ending on 31st March 2014. So it will start from 1st April 2013 to 31st March 2014. Okay with this so far? Now check. Did H buy the share on the first day of the current year itself, or when did they acquire? Or they acquired midway? Midway? Somewhere during the year? That means how many months has already passed since the start of the year? They purchased the shares in July. That means April, May, June, July. 4 months is already passed into the year. Then only they purchased the shares. Am I right in saying so? All of us are okay with this? Okay, let's keep that date in mind and read the next adjustment. The balance of general reserve and P&L as on 1st April 2013. 1st April 2013 means what? OB. OB meaning opening balance of which company? S Limited. S means it's a holding company or subsidiary company. Subsidiary company was 10,000, 7,500 respectively. They've given opening balance of general reserve and P&L. We'll see why. On 1st Jan 2014, that is during the current year itself, H Limited sold the goods to S Limited. Goods costing how much? 7,500. But they've sold for 10,000. Who sold to whom? H to S. Cost 7.5 but sold for 10. That means did H make any profit? How much profit? 2,500. Stop there only. They don't have to. We don't have to read further. H Limited made a profit. Yes or no? As long as H and S are two different companies, one can make profit from the other. Correct? Now what are you doing? Consolidated financial statement. If you still show this profit, what does it look like? I made a profit of 2,500 from myself. Yes or no? Can you pass that? That means what you have to do? Eliminate such unrealized profit. Is this okay? But not on the total goods. We have to read further. But profit has to be eliminated. This much understanding has come. Everybody? Can we read further? Yeah. On 31st March 2014, that means the last day of the year, 50% of the goods are still lying unsold in the godown of S. Who sold to whom? H to S. That means who has that stock? S Limited. Do they have 100% of such goods, or they only have 50%? That means since H Limited sold the goods at selling price, S Limited is valuing that goods at what price? Selling price itself. Yes or no? Because, correct no guys? Correct? Following or no? This is stock reserve adjustment we have done. Correct or no? So what we should do for that? You tell me. For 100% the profit is 2,500. Do you have 100% of the goods or only 50%? For 50%, how much? Half of it, which is 1,250. That is included where? In the closing. That means closing stock is shown at selling price. There is a profit margin. What we should do for that? Eliminate. So stock reserve 1,250 has to be reduced from consolidated balance sheet ka stock item. Is this okay? Same we have done in amalgamation also. No change there. Can I move on to the next adjustment? Okay. Bills receivable of 12.5 of H Limited are received from S Limited. So for H Limited is a bill receivable, means for S Limited will be a bills payable. What are these transactions known as? Mutual owings or mutual debts. What should we do for this? Cancel. So in consolidated balance sheet, you will reduce from bills receivable 12,500 and you will also reduce from bills payable 12,500 because they are mutual owings. Because now two companies has become one. As long as they're individual company, one can pay the other. When you consolidate, you're treating them as one. Who will pay whom? So that means those debts have stands to get cancelled. Fair enough. Next one. Creditors of S Limited include 6,000 due to H Limited. Same adjustment. From creditors, you will reduce how much? From debtors, 6,000. Where you will reduce? Consolidated balance sheet. No part of preliminary expense was written off during the year for S Limited. You're right. It's a typo. No part of preliminary expense was written off during the year for S Limited. That means what are they asking you to do? Write off. Write off means where it will go? All expenses will go where? P&L. Which company ka we have to do a write off? S Limited. That means S Limited or P&L will be same or it will reduce. Check the balance sheet. What is preliminary expense for S Limited? That means profit will reduce by, profit of S will reduce by 2,000 rupees because of this write off. Fair enough. Yes. From this data, consolidated balance sheet. Can we start? We have some working notes. Working notes will be same in every problem. It will not change. Since we are not doing too many, you'll not be able to practice so much also, but we'll follow the same working notes. And even working note also, there are various ways in which you can do consolidation. Don't refer our working note with somebody else and say they're doing it that way. There are multiple ways. Some do it as formula, some do it in table, some do it as different working notes, some do it in net asset method. There are various ways consolidation. So refer one, whichever you're comfortable. Either what we are doing or somewhere else if you're referring means that is also fine. But don't compare and bring in like, doubts, That will be difficult to answer. Fair enough? Follow that or follow this. With that in mind, can we start? Okay. First question only. Question number 1. First, we have few working notes. Once all working notes are done, then we can prepare consolidated balance sheet. That is in fact the easiest. First working note is shareholding percentage. Shareholding percentage. Who has purchased shares in whom? H Limited and S Limited. Check the balance sheet. Have they given the number of shares? How many shares has H Limited purchased? 7,500. Okay, directly I'll do. Is it okay? 7,500 shares H Limited has purchased. Go back to the S Limited ka balance sheet. How much is the share capital? Or maybe first problem we'll write off. Later on you may forget it. What is the share capital of S? Share capital of S Limited is 1 lakh. What is the face value of each shares of S? Face value of one share is how much? 20 or 10, right? So the total number of shares will be 1 lakh divided by 10, which is how much? 10,000. Yes or no? So S Limited totally has 10,000 shares. Out of that, H Limited has how much? 7,500 shares H Limited has out of 10,000. That means what is the shareholding percentage? So the percentage is 75%. Any doubt in this or easy? Fair enough? All of us. Excuse me. The second working note you have to do is working note number 2. General reserve of subsidiary company. Which is subsidiary company here? General reserve of subsidiary company, which is S Limited. Now check the adjustment. And year is beginning on which date we wrote in the problem? 1st April 2013. In the adjustment you check, have they given opening balance of general reserve? How much is that? 1st April 2000 ka balance was how much? 10,000 for general reserve and 7,500 for P&L. That means in general reserve balance, what should I write? I have to write by balance brought down how much? Guys? 10,000? Correct? Now check. Have they given S Limited ka balance sheet? In that balance sheet, you will have all the closing balances. Go to S Limited ka balance sheet. On the liability side, check general reserve. How much is it? 35,000. That is the closing balance of general reserve, guys. Correct or no? So far good. General reserve account should match. 10,000 became 35,000. That means something should come on this side. On the credit side, how much it should come for? 25,000. How can general reserve of 10 become 35? You've transferred 25,000 from P&L to general reserve. Yes or no? That's the only way general reserve can shoot up, because they have never no other adjustments. Yes sir? That means here what I should write? By P&L account arrived as balancing figure. This is your working note number 2. Easy? Can we go for next working note? Working note number 3. Working note number 3 is preparation of P&L account of subsidiary company. Which is subsidiary company here? S Limited. So P&L account of S Limited we're going to prepare first. Check that adjustment again. Have they given P&L account of S Limited opening balance? In the adjustment you check on 1st April 2013. How much is the balance of P&L? 7,500. Go to the balance sheet of S Limited. Check, are you able to see any P&L there? There or not there? There. How much amount? 27,500. Correct, guys? 7,500 is your opening balance, 27,500 is your closing balance. Check your previous working note. Did you transfer any money from P&L? What is the journal entry there? P&L to general reserve. That means in P&L account, what you should write? To general reserve, the transfer entry is 25,000. So far, good. All of us. Did the subsidiary company declare any dividend given in the problem? Did they tell? No, that adjustment is not there. Any excuse me, any bonus shares, etc., was given? No, that means it's a very simple problem. Now check. What is the total of this side? 25 plus 27,500 is how much? 52,500. Yes or no? Sorry, sir. That is for S Limited. But closing balance is already ascertained. That means they have got the closing balance without writing off preliminary expense. You have to consider them separately. You can't bring that into ledger. Got his question, that is very much valid. He's saying, why are you not bringing in preliminary expense? Because in the adjustment they told what? No part of preliminary expense has been written off for S Limited. Correct? Preliminary expense will be transferred of S Limited will be transferred to where? P&L account for S. And what account are we preparing? Check the heading. P&L account of S only. He's saying, why don't you bring that in? Answer is, in the balance sheet they already gave closing balance of P&L. Correct or no? And in the adjustment they told, now write off preliminary expense. That means this is the closing balance before write off. That, since they have ascertained this already, we'll have to show that separately. Fair enough, you can't bring it in here. Because if you bring it in here, balance will not be 27,500. Balance will be lower. But they've already ascertained the balance. Hence, we can't bring this in here. Like sole proprietor, if you have attended one, oh no, you're not attending group 1. Fair enough. Bala should be able to. Depreciation adjustment, remember? Yeah, he's saying yes for. Okay, fine, fair enough. So are we okay with this? 50 to 500 this side. That side also should be how much? 50 to 500. Is it 50 to 500? You check and tell me. Excuse me. Is it 50 to 500 or something else? How much is the balancing figure? There is a balancing figure of 45,000. Yes or no? Now, simple logic. Opening balance of P&L was 7,500. Suddenly, closing balance is increasing, sir. And to 25,000, you also transfer to general reserve. That means what is that 45,000? Profits made during the current year. That is what we ascertain as balancing figure. Got it? So again, if you want to tie out, opening balance of profit was 7,500. Current year you made 45. So that means the total profit is 50 to 500. In 50 to 500, you transfer to general reserve 25. Hence, the remaining balance is only 27. Got it? So that means here I should write what? By profit for current year. This is working note, so you can just write profit for current year arrived as what? Balancing figure. Manageable. Easy or tough so far? Easy only. Working note number 4, you'll have to concentrate. Working note number 4 is analysis of profits of S Limited. Though the wording says profits, it is reserves and surplus basically. Or if you want, you can write that only. Analysis of reserves and surplus of S Limited. Analysis of reserves and surplus of subsidiary company, which is S Limited. That is your next working note. We'll have to do it in columnar format. First is particulars. Excuse me. Who are the shareholders of S Limited? Who are the shareholders of S Limited? X Limited and others. Others only we call it as minority interest. X owns 75%. That means minority interest owns 25%. Where do you show reserves and surplus? Under which heading in balance sheet? Shareholders funds. That means reserves and surplus are the entitlement of shareholders. That means who are the shareholders of S? X, H and MI, meaning minority interest. That means all the reserves and surplus has to be distributed in the ratio of 75-25. That distribution will happen in this working note. This is okay? This is your most important working note. Can we proceed? So that means here I will write particulars. H Limited. H Limited owns about 75%. Next, S Limited. S Limited owns about 25%. Oh, sorry, H and others. Sorry. Others meaning we'll write minority interest. Excuse me. H limited and minority interest. Don't freak out if you see non-controlling interest. That is IFRS term. Okay. Most probably they shouldn't be using it, but if at all you see, it's same. Here we'll use MI. MI meaning not of phones, minority interest. So yes. Let's get started. Under that, first thing you need to write is pre-acquisition profits, or our study materials calls it as capital profit, or some books will also call it as capital profits. Pre-acquisition profits. First thing is to find out that pre-acquisition, N is missing there, add it up. Pre-acquisition profits. By looking at the name, what can you tell me? What do we mean by that? Pre-acquisition profit? Profit made by who? S Limited before H Limited became a shareholder. Yes or no? When did H Limited acquire the share they told in the problem? 31st July. That means any profit made by S Limited before 31st July, can I say is pre-acquisition profit? Any profit after 31st July is post-acquisition profit. Pre and post. Why we have to segregate, we'll see later. First we'll segregate, do it and then figure it out. Yes. So now we'll have to figure out all the reserves. We have two reserves here. Two reserves in surplus. What are those? General reserve and P&L. If you have more, no problem. All the reserves you have to segregate them as how much is a pre-portion, how much is a post-portion. How much was the reserve balance before acquiring, how much is the reserve balance after acquiring. Yes. Alright. Now, we don't have to go to the question. We have done enough in working note only. Check. General reserve has an opening balance. Opening balance means which date? 1st April 2013. When did H Limited acquire? 1st July. 1st April comes before or 1st July comes before? 1st April only. That means this 10,000 is pre-acquisition profit or post-acquisition profit? Pre-acquisition. Any doubt? Once more. Doubt or once more? Yes or no? What did I say? Tell me. 10,000. Instead of distributing how we do the distribution is, instead of distributing the closing balance, we go component wise because there'll be a lot of adjustment. Closing balance will bring a lot of havoc. So how are we going to distribute reserve is, each component we're going to distribute. So if you distribute these two, automatically closing balance will come as a balancing figure. Yes or no? That's what we're going to do. So hence we are taking up the first component wise. What's the first component? First component in general reserve is opening balance. Opening balance means existing on which date? 1st April. When did H Limited become the shareholder? 31st July. Correct or no? That means this is pre-acquisition profit or post-acquisition profit? Pre-acquisition. So under pre-acquisition profit, I should write first component is excuse me. First component is opening balance of general reserve. Opening balance. In fact, have 4 columns. Better. So you'll be able to tie out it better. H Limited, minority interest and total. Coming back to this, under pre-acquisition profit, you'll write opening balance of general reserve. How much is the total opening balance of general reserve? 10,000. Correct? Whom are you going to distribute the reserve to? The shareholders. Who are the shareholders of S? H and minority interest. So distribute 10,000 in 75:25 ratio. How much does that be? 7,500. Huh? Why? Doubt. Good doubt. Doubt is, sir, shouldn't we give entire 10,000 to minority interest? That is not the way companies work. Once you become a shareholder of the company, suppose today you owned shares of, let's say, Tata only. Whatever is the asset of Tata on this day belongs to you. Tomorrow if you sell Tata ka share, nothing belongs to you. Did that sentence make sense to you? No, it didn't make sense. Today you bought some shares of Tata. Let's say some shares. Let's say you bought 10% of Tata you bought off. Had so much money that you bought off 10% of Tata only. Okay. Alright. So let's say Tata Limited liquidated or they sold their business to somebody else. Correct? That means if they sold somebody means you will get all the money. You are a shareholder. You will get, if first the external liability holders will be paid off. And then if any money still remains means we will give it to whom? Equity shareholders. Yes. Correct or no? But the moment you sell off tomorrow, let's say you sold 10%. Today you own 10%. Tomorrow you sold that 10% to him. Now will you get any money? The day you owned, 10% belonged to you. The day you quit, nothing belongs to you. Why this approach is, like imagine you owned it for one day. Shares are being traded left, right, center. Yes or no? People hold it for 1 second, 10 seconds, 1 minute, 1 year, 10 years, 100 years. Can they go on checking? Okay, you own for 1 minute, take this much is your profit share. You own 10 rupees, you own for 10 minutes, take 10 minutes ka profit. Can they do it like this? So whoever is a shareholder on that particular day will get everything. If you are not a shareholder on that day, you will not get anything. Same goes for dividend also. When you declare a dividend, if you are a shareholder, you will get. Even 1 day before if you sell, or even 1 hour before if you sell, you will not get. I don't know, that's the way it works. Because for compliance sake, if you really bring in like this and all, nobody will like to work in company. Every minute, every second, somebody has to keep journalizing. Because it is being traded left, right, center. Yes or no? So that is the concept. Did you buy the share? Did H Limited buy the share? Yes. That means whatever is there in the balance sheet now belongs to H. To that 75% extent. Hence apportionment is still 75-25 only. Got the question. You're not giving cash. We are just only apportioning the reserve. Yes, sir. No, got it. So that means 75. What we have done is correct only then. So one component we have covered. That is what? General reserve. Ka opening balance. What is this 25,000? It came from what? P&L. P&L also we will distribute. That means we'll take care of this when we come to P&L. Fair enough? So this we took care of. This we're going to take care of in P&L. That means this is automatically taken care of. So this is the approach we're doing for reserves. Instead of distributing the closing balance, we will distribute the each component on the credit side, debit side. That way closing balance is ascertained as a balancing figure. Why this? There will be a lot of adjustments. So if you distribute only closing balance, it will create a lot of problem. To identify how much of that closing balance is pre and post is very difficult. Component wise identification is easy, hence component allocation. Fair enough. Move on to the next ledger. What is the next working note you prepared after general reserve? You prepared P&L account of S Limited, that is subsidiary company. First component is what? Opening balance. Opening balance means balance existing on which date? 1st April. When did H Limited buy? 31st July. That means this is pre-acquisition profit or post-acquisition profit? Pre-acquisition profit. Is this okay? I means in my working note under pre-acquisition profit, what I should write? Opening balance of what? P&L account of which company? Of S Limited. In fact, we have written the heading only as that, analysis of reserves and surplus of S Limited. So you don't have to write S Limited every case. First problem I'm writing. Okay. What is the total opening balance of P&L we wrote? 7,500. You will show this under shareholders funds. That means there is an entitlement of a shareholder. And so what is the who are the shareholders of S? H and minority interest. In 75-25 ratio, split 7,500. How much are you going to get? 5625 and 1875. Any doubt till here, guys? Can we move on? First component done. What about this 45,000, guys? What about this 45,000? What is that 45,000 heading? You check. Profit for the current year. Current year means 12 months. How many months is pre-acquisition profits? How many months is pre-acquisition profit? From 1st April to 31st July. That means how many months? Only 4 months. Is that 4 months ka profit what they have given or 12 months ka? For 12 months, if the profit is 45,000 means for 4 months, how much? No, this is an assumption. We are assuming that profit is evenly distributed. Absence of information. So, fair enough. For 12 months, 45,000. For 4 months, how much? Because in that 4 months ka profit is pre-acquisition profit. Balance 8 months ka profit is post-acquisition. Yes, sir. Okay. That means what I should write here? Under pre-acquisition profit, what I should write? So this I'll write 1. This I'll call it as 2. And the third one will be what? Third is what? profit for current year. So here only we can show the amount. How much was the profit for the current year as per previous working note? 45,000 is the profit for 12 months. We want only for pre-acquisition period, which is 4 months. How much is that? So total profit for the current year in the pre-acquisition period is about 15,000. That is going to get distributed to H Limited and minority interest in the ratio of 75-25. Apportionment will be portion 11,000, 15,000 in 75-25 ratio. How much is that? 11,250. 3750. Fair enough. Stop there. You distributed how much? Huh? Understood? Okay. You distributed how much profit? 15,000. Correct or no? But there was one adjustment we had to do. No, they told in the adjustment. What is that? Write off preliminary expense for S Limited. So, but you already distributed 7,500 and 15,000. Correct or no? Correct, guys? So when you write off preliminary expense, will the P&L be same or will reduce? Reduce. Did we bring preliminary expense into the ledger? Because closing balance was already found out without writing off preliminary expense. Hence, we couldn't bring them into the ledger because they have not considered. Yes? So, but here we can consider. Yes or no? That means here you have given more profits or less profit. Preliminary expense you should have deducted and then distributed. Let's say 100 rupees is a profit. Preliminary expense is 20 rupees. So after deducting, how much remains? 80. That means 80 should have been distributed. Here, how much got distributed? 100. That means what do? Give 20 as a negative apportionment. It's a statement. Yes or no? So I've distributed positive. Profit means positive apportionment. Loss means negative apportionment. Is it okay? So preliminary expense, what I'm going to do? Preliminary expense to be written off. To be written off. How much is the total preliminary expense you have to write off? 2,000. Yes or no? I have to write plus 2,000 here or minus 2,000? Minus 2,000. Hope everybody got the science ka khel there. Yes? So do it in 75-25 ratio. How much will that be? 1,500 in brackets. 500 in bracket. So far, good guys. Doubt or okay? Come back to P&L. What did you distribute? Did you distribute 7,500? Yes. Did you distribute 45,000? Meaning pre-acquisition profit ka share did you distribute? If these two distribution is done, means this is automatically taken care of. Correct or no? Because out of that only you gave 25,000. Correct or no? If these three are considered, means this is anyway taken care. Yes or no, guys? Once more or okay? Once more or okay? Especially this portion. Why did we didn't do that? 25,000. You transferred 25,000 from P&L to general reserve. From which? From this 45 only you could have transferred, or maybe from 7,500. Both 7,500 and 45,000 ka pre-acquisition portion you already distributed. Correct or no? That means this is automatically taken care of. Though this went to general reserve, again if you distribute general reserve, what is the point? It will be a double distribution. Yes or no? Guys, yes or no? That means this need not be separately distributed. This gets taken care of that way. So if these three are taken care, means this is automatically arrived as a balancing figure. Yes, that's how we are doing at component level. Not at the balancing carry down level, but at component level. Done. If you have understood, you can give me total pre-acquisition profit ka share. Total. How much is pre-acquisition profit share for H Limited? No other adjustment is there. A very simple problem this one is. For H, the share is summation of all that will be 22,875. And for minority interest it is for minority interest it is 7625. Total guys done for. Yes, this is only what? Pre-acquisition profit. Next we have to put up what then? B will be what? B will be post-acquisition profits. How many months ka is post-acquisition profit? 8 months, because in 12 months 4 is pre means balance 8 will be post. Only one component will come in post acquisition period, which is what? Profit. Nothing in the general reserve also, because general reserve already taken care of. Yes, you feel so? So only one component is there in P&L account in post acquisition period, which is profit for 8 months. 45,000 is a profit for 12 months. How much is the profit for 8 months is what you have to find out. So profit for current year calculation will be 45,000 into 8 divided by 12. How much will be that number? 45 by 15 is pre-acquisition means balance 30 will be post. No, that way also you can find out if you don't want to calculate. So what are you going to do for this 30,000? Profit belongs to whom? Shareholders. Who are the shareholders? H and yes, my statement is not correct. Slightly I'll modify, but for the time being it's good. I'll use the term profit belongs to shareholders. That is not entirely correct though. We'll modify it later. First let's gain a basic understanding of stuff. Okay. So 30,000 in 75-25 split you do. How much is going to be? 22,500 and 7,500. Any other component is there in post acquisition period? No other adjustment. So you can write total. Total is still 22,500, 7,500 and 30,000. This working note number 4 is done. No worries, I believe. No worries, guys. Can I go for the next working note? Working note number 5. Sir, how many are there? Too many. No, just kidding. 3 more after this, or 2 more after this. That's all. Working note number 5 is minority interest. Minority interest. Now, minority interest means how much are they owning? 25%. Shareholder, what and all you want the shareholders funds, you said? Share capital and reserves in surplus. That means minority interest will just ask for 2 things. His share of capital, that is 25%, correct? Second one, his share of profits. That profit now you have distributed as what? Pre-acquisition and post-acquisition. So minority interest will is entitled for 3 things here. Capital ka his portion, his share of pre-acquisition profit, his share of post-acquisition profit. If you give this, then it is he's good enough. Yes or no? Why should we show this amount, or I'll tell you the answer. This amount of face value of capital, pre-acquisition profit, post-acquisition profit, you have to sum up and show it on the balance sheet. Consolidated balance sheet you have to show. Can you tell me why? You own, X Limited only owns 75%. Does 25% belong to you X alone or somebody else? That means minority interest owns 25% of the company. Correct? That means you have to pay them. So you have to show them separately. This is one explanation. I'll give you another explanation a little later once we do the balance sheet. That is a better one in fact. For the time being, is it okay? Fine, good enough guys. Since 25% of the company is owned by somebody else, company belongs to somebody else, that means you have to show their liability also. So that has to be shown in consolidated balance sheet, otherwise balance sheet will not match out. Yes? Next working note. You are just going a little ahead. Next working note number 6 will come now. AS13 if you are done, you should not ask. It's AS13 ka adjustment, investment. Anyways, coming back, minority interest. What are the 3 things we said minority interest will ask for? Capital. So share capital, can I write? Share capital of which company is entitled to get? H Limited or S Limited? S Limited. Check the balance sheet of S Limited. How much is the total share capital value? Huh? 1 lakh? Huh? Sure. Not smaller. Okay. So 1 lakh and minority interest owns about 25%. So that means what is minority interest ka share? So he owns 25,000 ka share capital. Share capital is always shown at face value, so he'll get 25,000 only. Fair enough. Next, what he'll ask for? Add his share of pre-acquisition profits. As per working note number 4, do you have minority interest ka his portion of pre-acquisition profit? How much is that? 7625. So that means here you will write 7625. Since it's a profit, we are adding. If it was a loss, subtract. Loss will decrease the entitlement of a shareholder, or it will increase? Decrease. Hence loss deduction. profit addition. Next he'll ask for one more component. What is that? Post acquisition profit ka his share. So again, as per the same working note number 4, we have got his portion of post acquisition profit. Check. This is for a holding company. This is for minority interest. So minority interest ka share is about 7,500. Fair enough. So give me the summation number. Summed up number 40125. Awesome. Even though awesome, if it is not awesome, understood at least. Okay. Can I go for the next working note? Or need a minute or next? Next. It's break time already, no? Working note number 6 is known as cost of control / capital reserve. Capital reserve, you can write it in brackets. Cost of control, in bracket you can write goodwill. Instead of goodwill, they call the term as cost of goodwill, or in plain terms you can write goodwill also, it's fine. But there will be a reference of cost of control in the problems in most of other books. So let's find that. If you remember, when I started consolidation, I explained you one gray area or one problematic area. What is the main problematic area? Investment. For one guy, if he has invested, means for him it's an asset. Investments have debit balance. Assets have debit balance. But for another company, it is a share capital. It has what? Credit balance. But investment is shown at cost price. Share capital is shown at face value. They have to be same or they might be different. The difference between the two is what we recorded as goodwill or capital reserve, along with few other things. We'll come to it. That cancellation of share capital and investment will happen in this working note. Is that okay? Let's see how the cancellation process works. First check the numbers and then ask if you have any doubt. Okay. Now first, what are the things we're cancelling? Investment and share capital. First one, cost of investment. Now check who made an investment in whom. H Limited. Go back to H ka balance sheet. What is the cost of investment they're giving? 1,40,000. One adjustment you have to do from this. Actually, there are quite a few. One adjustment we are able to do is deduct the pre-acquisition profits as per working note number 4. Go back to working note number 4. Is H Limited getting any pre-acquisition profit share? Check the screen. How much is that? 22,875. So that you're supposed to deduct from this. And then, excuse me, is there any pre-acquisition dividend by any chance? Is there any pre-acquisition dividend, guys? Any reference to dividend was given? It's a format, so I'm just putting it in. You need not write if you want. Next, what are the two things we're cancelling? Investment and share capital. Share capital is always shown at face value. So if you want, you can write less face value of share capital. Does H Limited own 100% of share capital or only they own 75%? That means you can cancel 100% or 75%. So what is the total share capital of H Limited or S Limited rather? Total is 1 lakh. H Limited owns about 75%. That means the H Limited ka share capital share is how much? 75,000. So do this working note. If you want it as a formula, means positive number means goodwill, negative number means capital reserve. Positive number cost of control or goodwill, negative number capital reserve. Tell me what is positive. It's a positive or negative? Positive. How much positive? All that as goodwill then. How much is that? 442, 125 is what you're getting. Yes, guys. Got it? Now one doubt you should be having naturally. Why are we deducting 22,000? Correct or no? Can we go back? Where did we get this 22 from? Working note number 4. Yes or no? Okay. Now what is 22,875? Pre-acquisition profit or post-acquisition? Name itself is saying pre-acquisition. That means this was made before H Limited became the shareholder. Yes or no? This was the balance. 22,875 was there before H Limited even become a shareholder. Yes or no? Logically you think should they get? Logically. Logically, they should not get. But this way, the company doesn't operate. We know, I just now explained. The moment you become a shareholder, everything is yours on that particular day. The moment you leave, nothing. All or nothing wala scenario here. So is H Limited getting to 20 to 875? Meaning, are they, eligible for that 20 to 875 apportionment? Yes. But logically, should they get it? No. That means what AS 13 says is, now you just check. H Limited paid how much to get to buy the shares of S Limited? 1,40,000. They paid 1,40,000. One hand they paid 1,40,000. On another hand, they are receiving an apportionment of 20 to 875 of profit. So logically, you tell me, is your cost 140 or it is lesser? Hence, what do we do for pre-acquisition? Pre-acquisition profit. Don't treat it as normal profit. Reduce it from cost of investment is what the AS13 wala says. Got it? Once more. So effectively, your cost of investment is not 140. It is 140 minus 20 to 875, which is how much? Do that calci work for me. 140 minus 1,40,000 minus 20 to 875. 1,17,125. So 1,17,000 is a net cost for you. Yes or no? What is the worth of the investment you purchased? 75,000. For 75 worth of an investment, you paid 1,17,000. That means this purchasing company made a profit or they made a loss. For 75 worth of investment, they paid 117. They're paying more. That means they made a profit or loss? Loss. This loss, they call it as goodwill, or another name is what? Cost. You want control. H Limited wants to control the business of Y Limited, right? This is the price they're paying for that control. Hence the name cost of control. Is it okay? Which is still referred to as goodwill. And amalgamation principles applicable there. AS14 ka. Is it okay? Yes. That is the logic of deducting that. Yes, sir. One more run through or okay? Good enough? Next problem you will not say again why deduct. And this is the reason why we had to split the profit between pre and post. Because pre-acquisition profit has to be reduced from cost of the investment. Post-acquisition means it is your regular profit. Regular profit will be transferred to P&L account. Because of this, we had to split the profit as pre and post. Otherwise, we could have done it as one collation. Hope that is also okay for you. Why pre and post? What? Little bit at least is okay. Next problem, same thing with one or two extra adjustment, but format will remain the same. No change. Sir, Anna. Okay. Working note number 7, sir. The last working note, sir. After that, we still have to do balance sheet though. Working note number 7. Consolidated P&L account of which company? Who's doing consolidation? H Limited. Holding company consolidates. Fine. They take subsidiary ka balance sheet and they consolidate. Sorted out? Done. No problem. So can we move on to the next one? Consolidated P&L. We are preparing an account. So let's do an account format. In fact, this we're calling it as working note number 7. So that's okay. Check the balance sheet of H Limited. Do they have any P&L? Check the balance sheet of H Limited. Do they have any P&L balance? That is opening balance or closing balance? But I will write by balance brought down only still. How much is the balance? 40? I didn't get that, sorry. 45,000. Why am I writing as opening balances? Due to consolidation, P&L balance will change. We take the balance they have given, to that make some adjustment and get the revised closing balance for consolidation purpose. Hence, whatever balance they have given becomes my opening balance. This account I'm not preparing for whole year, I'm doing for last day. So that means last day ka balance will be opening also, last day ka balance will be closing also, that way. Yes, hope that's fine. So take the balance given. This is given in the problem. Yes, sir. Come to working note number 4. What did you get in working note number 4 ka part B? What is part B? Post-acquisition profit means, even in pre-acquisition profit, if you write as capital profit, post-acquisition profit, what you can write? Revenue profit. That is what our study material calls it also. In bracket, you can write revenue profits. All revenue profits will go where? P&L account. So, will you transfer entire 30,000 revenue profit of S Limited to P or H? Or they will only get their share? How much is their share of post-acquisition profit? So, where should this come? On the debit side or credit side? You're transferring the profit. So profit balance is increasing or decreasing? So profit has credit balance. How do you increase it? Credit again. So that means you'll write here buy profit from whom did you receive this profit from? Subsidiary limited. So in bracket S limited. How much is that? As per working note number 4, 22,500 rupees. Yes, sir. Correct.
22,500 is already there at 45,000.
No. Check, where did you get 45? It is in whose books? H ka or S ka? H. So it is not. This 22,500 is of S. I've written clearly here. That 45,000 is for H limited. You are consolidated and getting the total profit. So it is not included. What you are saying is that 45,000 of profit for the current year of subsidiary. Here, ironically, both the numbers are same. Hence the confusion. Is that okay? That is not the 45,000. If you are, for your understanding, you can write. In fact, underline the heading. H limited ka. So in bracket also, if you want, you can write H limited ka. This is not S limited ka profit for current year. Probably that's what you thought as. That is not that. Yes, sir. Correct. One adjustment we have to do. What is that one adjustment? One adjustment we have to do. What is that? We discussed this. I told this will come in every amalgamation, consolidation, it will repeat. Just now we discussed also. No? What are the common adjustments we get? Or what are the forms of mutual owings? Debtors, creditors, BR, BP, loan, and then stock. It is there or not there? It's there. Now let's read that adjustment again. So what are they saying? In January limited, H limited sold to S limited. Who's making the sale? H. To S limited they're making. The cost of the goods is 7.5, but they sold it for 10,000. Correct? That means that 10,000 is what now? Selling price. Selling price of H is nothing but cost price of S. Yes or no? That means if S does not sell those goods, means S will show that 10,000 as closing stock in their books. Correct? That's what will happen. But here, did S limited is having 100% of the goods, or they only have 50%? 50%. For 100% of the selling price is 10,000, means for 50% how much? 5,000. Yes or no? So right now S is limited is showing that inventory at 5,000. As long as there were two individual companies, transaction is absolutely fine. But now what happened? Consolidated. Correct or no? And S limited is showing that inventory at 5,000. But in reality, you tell me, is the cost of the goods really 5,000? What is the total cost of the goods? For 100%, what is the cost of the goods? 7,500. So 50% will be 3,750. So inventory should be shown at cost or NRV, whichever is lower. But right now S limited is showing it at 5,000, which is what? Selling price. Selling price means it will include what? Profit margin. So what we should do? Should eliminate. How much is that elimination? 1250. This is one way to get it. Or simple way is cost is 7.5. Selling price is 10,000. So that means the profit is 2,500. 2,500 for 100%. For 50%, 1,250. Another way. Manageable. Who made that? Who sold the goods? H limited. So that means who made the profit? H limited. Whose P&L are you preparing now? H limited. In reality, you tell me, is it an honest profit? If you record this, it will look like what? H limited made the profit with itself. Correct or no? As long as there were two companies, H limited can book this profit. But now are they H and S are two companies, or they're one company now? That means what we have to do? Profit has to be reduced. Now how do you reduce profit? Debit it. Again, one more component you have to reduce. What is that? Stock is shown as selling price. Stock also you have to reduce. How do you reduce that? By crediting. So the journal entry is P&L account debit to inventory, or you can write P&L account debit to stock reserve. And stock reserve, reduce it from inventory valuation for 1250. Manageable. Yes? Doubt?
But in that also stock is 75%, 25%.
I'll come to that. Balance sheet we do. Keep this question on hold. His doubt is, sir, we don't own 100% of the company. We own only 75%. So out of profit that you make, 75% you split. One, logically that question is incorrect, because H limited sold. That 100% of the profit, which company made? H only. That profit belongs 100% to H. Your question will be valid if S limited sold goods to H. In that case, S limited would have made the profit, and S ka profit belongs to H and minority. In the other way, it is top down. If it is bottoms up, I'm talking about S to S, so H wala bottoms up here. Okay. In that case, your question would be relevant. Still, the answer is same. Why? I'll do the balance sheet. Then I think you should your question. I'll make a sentence. I tell a sentence. Probably then your question might be sorted. Otherwise, shoot it back again. I'll put this on hold. Fair enough. Just 5-10 minutes. Can you hold on? Yes. So here, what any other entry pertaining to the numbers or any other doubts pertaining to these numbers? So what I should write here? To what? To stock reserve, or you can directly write inventory also, it is fine. Or most of the books first wrote it through stock reserve itself. If you want to be in sync, then write stock reserve. So we can present it this way if you want. What is the total cost selling price? 10,000. What is the total cost price? 7,500. So 10,000 minus 7,500 is your total profit of 100% profit of 2,500. But you have only how much of goods? So for 50%, how much is the profit? Which is 1250. Fair enough. No dividend adjustment, nothing. I see it. So you can get the closing balance. This closing balance is for consolidation perspective, arrived as balancing figure. Tell me, what is that balancing figure? 66,250 rupees. Total is 67,500 on both the sides. These are your working notes which will appear in all consolidation problems. Yes, sir. Now the easiest part, which is balance sheet. Can we start with balance sheet? This is not a working note, it is a requirement. So consolidated balance sheet of H Limited and its subsidiary S Limited as on which date are we preparing? 31st March 2014. Can you help me with balance sheet ka format? Which is particulars, note number, amount. So can we bring everything here? It's fine with you, or we'll do notes? Here only. In examination, I told you know how to prepare notes, right? We've shown, so you're comfortable with that, right? Examination, it's a time call. So particulars, amount. First, under particulars column, heading is equity and liabilities. Under equity and liabilities, point number 1, shareholders funds. Under shareholders funds, share capital. Now, two companies have share capital, H Limited as well as H Limited. Question is, you will add the two and show that number, added number. Only H ka you will show, or only S ka you will show. Three options. Addition, only H, only S. Addition, only H ka capital, only S ka capital. Three options. Only H. Others, I'm gottilla. Yes. Huh? H ka full you will show. How much is H ka full pa? H ka is 4 lakh, no? He's saying 4 lakh plus. He has another option. Okay, 4 lakh plus 25% of S, which is 25,000. So he wants to show 4 lakh 25,000 as share capital. That is another option. D. 4 lakh, only H ka, only S ka, or H ka full, S ka 25% belonging to minority interest, he's saying. That is his thinking. So which one you want to choose? Only H. Why only H? Just curious. Just listen to him. What? Any or just gut feel, or any particular reason? Perfect. You can't show share capital of S because H made an investment in S only. No? For H, it is an investment. That is the reason we did one working note. What working note we did? Cost of control. What are the two things I told will get cancelled here? Share capital as well as investment. Yes or no? S ka share capital is H ka investment. Yes or no? Correct or no? And his question is 25,000. Why can't I show? I've done working note separately for that. No? I'll not only show share capital, I will show including reserves and surplus how much. This will come, but not as share capital. Fair enough, because consolidated balance sheet ka share capital is not 4,25,000. It's only 4 lakh. Yes or no? Because you can't show S ka share capital because for the other company it is an investment. Hence, you only show what? The conclusion is what? You only show the share capital of H Limited, which is 4 lakh. True or once more? Or I'll give you another explanation. Maybe that will help you. H controls S. Yes or no? Because they own 70. How much share? How much percentage? 75%. What can you control in S Limited? Can you tell me? What can H control? Can they control assets? Can they determine when to depreciate, how much to depreciate, when to buy? Yes. Whom to buy from? Correct? Can they control assets? Can they control external liabilities? Can they control anything over share capital? Share capital is already sunk. It is gone. Yes or no? Can they control that? So when you're consolidating, you only get control over assets and liabilities. Hence, only you add assets and liabilities and not share capital and reserves and surplus. Because effectively what you're getting control is only on the assets and liability side. Fair enough. Now you'll add 100. I'll make one more sentence. I'll repeat this if you don't get it. Assets and liabilities, we add 100% extent. But in reality, do we own 100% or only 75%? But assets and liability, we can control fully. Hence, we consolidate to the extent of 100%. But we show that 25% of this belongs to minority interest on the liability side. Assets, you show 100. Minority interest, you show 25. So effectively, how much can you get? 75. So your entitlement is only 75. That is another necessity to show minority interest. Fair enough. So you will only show share capital and reserves and surplus of H Limited alone. Because you don't get any control of S Limited ka capital and reserves and surplus. That is sunk. You can only control assets and liability. Hence 100% consolidation. Yes or? No, absolutely no. We just one liner we wrote. We'll do. Then we'll see. If it doesn't match, we'll take you up a question. He's saying balance sheet will not match. Chah, you already jinxed it. Let's see. It works or not. Fine. It will not. It will match. Fine. Let's see. Testing exercise. 5 minutes down the line. Can we go move on? Is the conclusion good enough for you? So in consolidated balance sheet, we only show share capital of, for your understanding, what you can write? Only H Limited. If you want, I'll give you some pointers for consolidated balance sheet. What checkpoints? Let's do the problem and then I'll give you a checkpoint. Fair enough? Next, after, can I go for next one? Or any more doubts? After share capital, what is it? Reserves and surplus. Again, the same logic. H Limited has control, but they have control only over what? Assets and liabilities. Hence, only reserves and surplus of which company will be shown? H Limited ka. Fair enough. Yes. Now we'll list out the reserves and surplus one by one. What is the first reserve for H Limited? You check. General reserve. How much is that? Only of H, which is 75,000. Next is P&L account. P&L account, will you take 45,000 or did we do any working note? We did working note number 7. How much is working note number 7 saying? 66,250. So that is your consolidated P&L ka balance amount. Is that okay? Yes, sir. So how much is this? 66,250. Are we fine? Sir, doubt, sir. You just now told reserves and surplus they won't get control. Why are you adding subsidiary ka post acquisition profit? Because you don't get control over that. Doubt is there? Or now it came? No doubt at all. I've added now. How did I get 66,250? H ka was 45. S ka was 22. For general reserve I told don't add. For P&L I'm saying add. Isn't it contradictory? Why we add is, we not only prepare consolidated balance sheet, but also we prepare consolidated P&L. Yes or no? We prepare P ka, H ka profit, S ka profit, we'll collate and call it as what? Consolidated P&L. Where will that go? Balance sheet only, no? This is that number. Disclosure purpose. This you have to add because P&L is part of your financial statements. Is that okay? Everybody? Why that partial treatment? Why general reserve is excluded and why P&L is included? Because P&L is also not only balance sheet. P&L also we need to prepare. Tomorrow's session. Today's session only balance sheet. Tomorrow P&L. Fair? Yes. Doubt or move on? Okay, so do we have any capital reserve check? Working note number 5, we did goodwill or capital reserve? We got goodwill or capital reserve? Goodwill. So that means no other things. That's fine. Do we have any non-current liability like debentures check? Non-current liability? Not there. So non-current liabilities, you don't have to write. So I'm just writing so that you don't think that we have missed out. Non-current liability, nothing. But you don't have to write that in exam. Next is what? Current liabilities. We'll list them out one by one. What is the first current liability? Creditors. How do we show us? Presentation, just check. Creditors. How much for H Limited? How much is H Limited ka creditors? They have given 35,000. You get control over what and all? Assets and external liability. That means assets and liability should be 100% added. So now you will write H Limited this much, S Limited how much? 25,000. Yes or no? Is there any mutual owings? So less mutual debts. How much is the mutual debts given in the adjustment you check? Creditors of S Limited include 6,000 due to H Limited. So minus 6,000 you do. How much is the net amount you get? Creditors ka 50, so 60. 60 minus 4 is 54. 1,000 is the value of your creditors. Yes guys. Last one is your bills payable. How much is same presentation? How much is the bills payable for H Limited? 25,000. How much is it for S Limited? 15,000. So total is 40. Is there any mutual debts? Check the adjustment. I think they have given 12,500. All of you are able to identify that mutual debts. So if you net this off, how much you're going to get? 40 minus 12.5 is 27,500. Yes, 27,500. So that means liability side ka total you are good to find. No other component is there. Just give me a total of this, one of you. Oh, you should have, no? Luckily I have a space. Can I do a erase of current, non-current liability? Okay, actually make this as 2, make this as 3, make that as 4. I'll fit in. You just put an arrow mark if you have not written. Yes, minority interest has to be shown. Why it has to be shown? I told you the logic. Assets and liabilities we are adding 100%. We are only eligible to get only 75. On the asset side we'll show 100%. On the liability side we show minority interest for 25%. That means 100 minus 25% is how much? 75. That way they will net off. Okay. So here, one second, I'll come to you. Here I'll write below shareholders fund, separate category you have to write. Minority interest as per working note number. What is that? Working note number 5, 6, what? 5. So as per working note number 5, how much is minority interest come? 40,125. That will come. Now I think you're good to do the total. Yes, I had some doubt. One of you do the totals in the meantime. Others can just tell me doubt or no. Alright, so total then. Summation. Sorry? 6,62,875. Let's see on the asset side also will we get the same. I'll do it parallelly. You can do it one vertically. So heading is what first? Heading is assets. Below assets, what is the first one? Non-current assets. Below non-current assets, tangible assets. Ideally one working note for tangible assets should be given. Since you don't want to do it, we'll bring everything here only. First tangible asset is what? First tangible asset is land and building. Same presentation. How much for H Limited? For H Limited it is 1,20,000. Did they revalue any asset? All that also could be brought in. Asset revalued upwards 15%, downward 10%. But the first problem, we don't want to bring in everything. S Limited ka value is 40,000. That means put together everything is how much? 1,60,000. Depreciation and all don't say. They already prepared balance sheet. When will they prepare balance sheet? After doing all the adjustments only. So all that is taken care of. We are doing consolidated balance sheet here. So after that, second one is what? machinery. If you don't want to do this presentation, simply in the examination, I'm showing this for reference, you can just write in bracket 1,50,000 plus 10,000. This is also okay. If you don't have time, write in brackets, but bracket at least you show, ideally, if you don't want to write for H and S separately. Okay, machinery done. Investment in S Limited, can you show? That investment and share capital only you cancelled and you got what? Goodwill. But goodwill can we show? Yes. So investment will not come. So category B will be for intangible asset. And that one intangible asset we have in this problem, that is goodwill. As per which working note did we get goodwill? Working note number 6. What is the value of goodwill we've got? 42,125. So investment will not come. Next is what? After one non-current asset is the case of current asset. Do we have preliminary expense also?
Yes.
Then we can call out that also. Because preliminary expense are written off over many years, right? So better to club them under non-current category only. In fact, AS26 doesn't allow that, but anyways, nonetheless, let's leave it. Let's keep it as is. So how much for H Limited is a preliminary expense? 5,000. How much for S Limited? We wrote off, so it became how much? 0. So 5,000 plus 0 is about 5,000. Okay, only for H will come. Guys. Okay, next is the main category, which is current assets. Under current assets, list them out one by one. What's the first current asset we are seeing? Stock. For H Limited, how much is the stock? 52,500. For S Limited, 85,500. Should we have to do any adjustment? You have to reduce stock reserve. How much is the stock reserve we got in working note number 7? 1250. 1250. If you deduct, how much are you going to get? 1,36,750. After stock, the next asset is what? Debtors. Same presentation. H Limited, how much? 80,000. S Limited, how much? 45,000. Is there any mutual debts? So reduce mutual debts. You have already reduced from creditors. How much have you reduced from creditors? 6,000. Same thing has to be reduced from debtors, because for one company it's a creditor mean, for another company it is your debtor. So the final amount will be debtors ka 1,19,000. After that, bills receivable. Are you finding any difficulty in balance sheet or simple additions? Yes, subject to mutual owings ka elimination. So H Limited ka bills receivable is 22,500. S Limited ka is about 15,000. Is there any mutual owings? Check, have you reduced anything from bills payable? Mutual debts is about 12,500. So net eliminated number is, or net number is how much? 25,000. Is there any other asset? Cash and cash equivalents. Under cash and cash equivalents, how much for H? 10,000. How much for S? Was there any expense paid out? No, that means cash balance will still be at 15,000. Give me the total of this side. Hopefully it comes at 660 to 875. No? Yes or no? Yes, sir. Minority? Yes, sir. I checked that. Check properly. I did, she's saying. It's matching, she's also saying. Okay. Calculator was 2. 660 to 875. Check. It should. So all we have given double impact. That's your balance sheet.